Oil prices remained in the negative territory today after Wednesday's initial knee-jerk reaction to the news that OPEC Plus has deferred its November 26 meeting until the 20th. There's so much on the news wire right now about the OPEC meeting delay, so let's turn to Amena, OPEC chief correspondent and the Dubai deputy chief of Energy Intelligence. She's giving me more insights on this. A good evening to you, madam, and we thank you for staying up late for this conversation.
Thank you very much, and thank you for having me.
Thank you so much, Amena. It's good to have you. How much do we know about OPEC Plus meeting delayed in November the 30th? What are the facts and the politics of it?
Well, so far we know that the delay came because of an issue related with the revision of the baselines for some of the African states, which include Angola and Nigeria. So what we've heard from delegations so far is that both Nigeria and Angola, who during the past months have had their capacities being reviewed by independent companies and were presented with these assessments, are now in discussions with OPEC with regards to a revision to their baselines. And there seems to be a lack of alliance so far. There hasn't been an agreement reached with both Angola and Nigeria. But we understand that the dialogue is ongoing. The reason that the meeting was delayed is to give a little bit more time for these countries to discuss. And what I've heard today is that the mood seems to be positive. We know that both Angola and Nigeria haven't said anything. There were rumors in the market that they might leave OPEC or they might threaten to leave OPEC. Nothing like that. So talks are moving in the right direction, and hopefully by November 30th, we'll see a resolution to this.
Thank you so much, Amena. But how is the oil market reacting to the delay over the past 48 hours? How much do we know?
Well, traders, it's no secret that there's a lot of bearish sentiment in the market. Traders in general have been worried about demand. They're seeing the delay as a bearish sign. There are lots of rumors in the market. So that's why you've seen oil prices move under $80 over the past day, and today it's back around 80. But it's been quite a volatile environment, and because over speculation, really. If you look at the fundamentals, nothing has changed much on the supply or the demand side. It's just this feeling, the sentiment around the possibility of a slowdown in demand, as well as the news of OPEC delaying its meeting. It's adding a little bit of bearishness into the market.
But tell me, is there anything new in the playbook for traders rather than just fold their hands and wait for November 30th for what OPEC decision will be for the final time this year? And how do you think traders will look at that, in particular, keeping an eye on Russia and Saudi Arabia and whether they will roll over those independent cutbacks into 2024?
Yeah, that's absolutely right. I mean, apart from the group's policy, which is until now, the entire group has agreed, as per the current agreement, to keep the 2 million barrel per day cut until the end of 2024. So that's in place. The other factor is the voluntary cuts, which are being offered by Saudi Arabia and Russia. As per the current agreement, these cuts last until the end of December. And by the first week of December, we're expecting news from Russia and Saudi Arabia, if not before, to tell us what they plan to do. There's a high expectation that both Russia and Saudi Arabia will have to extend these cuts into Q1, because at least according to our calculations at Energy Intelligence, if the cuts are not extended into Q1, you're likely to see a surplus in stock. And this is something that OPEC Plus doesn't want to see a repeat of. But I think the group in general at this meeting want to send out a strong message that this market will not go unattended. Compliance will be a key focus to this. There's a lot of attention being paid to adjusting these baselines. So instead of going into a meeting where, it drags on for hours and hours, they would rather have a delay to reach a resolution and give out a really strong message to the market of how united they are and how attentive they're going to be of the market moving into 2024, especially as even by OPEC's numbers, we're seeing that demand is slightly slowing down in Q4 into Q1. So it needs that strong message from OPEC at this point.
Yes, very interesting. But tell me, why is Nigeria and Angola so crucial to this conversation and decision that OPEC would have to make?
Very good question. The issue of baselines in general is a very, very, very sensitive topic. Whenever baselines are discussed with any nation, there tends to be sensitivity around how much each country, even if it's on paper, gets a portion of the market. And that's why countries get very defensive of this. They insist on having numbers on paper that represent a larger share. So it's understandable that these discussions are complex. They drag on. But just from experience, I mean, we've been here before. We've been here with the UAE issue, for example, that happened in 2021 when they asked for a revision in the baseline. There was a deadlock for 2 weeks. They get resolved, and I'm expecting the same.
Very interesting. So as far as your outlook at energy intelligence is on November 30 meeting, it looks like $100 a barrel this year is out of the room, in a manner of speaking. So how do you think we're finishing off the current year?
Yeah, I mean, just one thing to note is that OPEC, or no state in OPEC, really pinpoints a price. Targeting a certain price is a failed policy. They've tried it back in the 80s. I mean, it doesn't work. So the price isn't really a target. Sure, there's a favorable range that supports budgets. And all countries would like to see oil under a certain range depending on their budget. However, it's not pinpoint to, especially, I mean, people talk a lot about this $100 oil. That's not the case at all. I mean, the most important thing is keeping a stable oil price. And a stable oil price means that there is confidence with investors to continue investing in the upstream sector in order to ensure that there is no lack of supply and oil remains relevant for the longest time possible. So killing volatility is key here. Now, for the end of the year, yeah, I mean, things are expected to remain volatile, especially with a lot of the geopolitical elements that are happening that are outside everybody's hand. So $100 definitely not. I mean, who knows? Again, I mean, we never know in this kind of market. But for now, just seeing what's happening, I would say it's quite unlikely, and we're likely to stay in this kind of high 70s to $80.
Very interesting. So if we begin to look into 2024, have a future forward conversation with you, Amena, about where the global oil markets will be next year, especially for African producers who need oil at certain good prices to balance their budget. For example, Nigeria, for instance, looking at 2024 budget, oil price at about $70 a barrel. So if you look at this and you look at what the IEA and OPEC forecast in terms of global oil demand will be for next year, what's your outlook from energy intelligence?
Yeah, I mean, if you look at the OPEC numbers, they're a lot more bullish. They're expecting a growth in demand of around 2.2 million barrels a day. The IEA numbers, I believe it's a growth of 800,000. At Energy Intelligence, we have around 1 million. So it's kind of in the middle. If the extension of the cuts, especially the voluntary cuts, happens, that's likely to lead to a higher oil price going into 2024. But it depends now on so many factors. I mean, as I mentioned, like geopolitics, what the Fed does, demand levels. I mean, we're seeing headlines today about a possible pandemic again in China. So all of these factors really, will play a big part in how the market reacts.
All right. We thank you for making the time for this insightful conversation tonight. Amena Bakr of Energy Intelligence in Dubai. Thank you very much and see you next time.